Chapter 7, Part 2 of the solutions. This should be the last video of the Chapter 7, Part 2 solutions. So we're continuing with accounts, our notes receivable. On August 2nd, Juan received $6,090 day 12% note as payment on his $6,000 account. Calculate the maturity date and also the entry for August 2nd. I like this problem. So on August 2nd, this note receivable was taken out. So there's 31 days in August, and it was the second day. So subtract the second day from the 31st for 31 days in August, and you'll get 29. All right, we're going to keep going and going and going until we total up 90. So it looks different than it really happened, okay? So as you work through this, you will have 29, okay? And you will get to 90. That is the goal. What goes in here has to add up to be 90. And how do we know it's 90? It was in the problems, a 90-day note. So at the end of the August, it had been 29 days. September has 30 days. So that puts it 69, right? 90 days minus 69. Remember, accountants like parentheses. Right? So what do you get when you subtract 69 from 90? What do y'all get? What do you get? I think I did that wrong. I admit to doing my math wrong. I was like, oh no, I just looked at it. I was like, no, I meant 59. And I don't know if I said it and wrote it wrong or both. But anyway, so 90 minus 59. Goodness gracious. 9 is 0. 2 and 3 is 5. Goodness gracious. All right, so 90 minus 59. 31, right? So 31 days to go. Now, October happens to have 31 days. So if October didn't have 31 days, let's say it was another month. But I think the problem is writing and talking. If it was a month that didn't have 31 days, then we would have another line and 1 day and whatever the name of that month was, okay? But anyway, let's go here. 9 plus 0 plus 1 is 10, right? Carry the 1. 1 and 2 is 3, plus 3 plus 3 is 9. So we've done it. So it's not like, we're just taking the months and adding them up and say, oh, that's 90. There was a reason. So work it like I did, and you'll always get the maturity date. Second one said prepare the journal entry for August 2nd, debit notes receivable, credit accounts receivable. All right, so what he did was he said, okay, look, I'm not going to be able to pay off my account receivable in time. Could you put me on could you do something to help me out, give me an extension or whatever? And the company was like, sure, but, it's going to be, charge you interest on this one. And that's how that one works. We're going to get a new term in this problem, honored. On August 2nd, oh, this is the same one, with just, now we got the numbers. Okay, perfect. Is it the same numbers? No, the same people. Same people. Well, I guess so. Same numbers. Okay. On August 2nd, we've got the same numbers as the last one, and assume the note is honored. In other words, paid. Honored, paid. Kept your word, honored your word, paid. All the same kind of connotations. How do we do the math? Now, it's a 90-day note, right? Now, I don't know if I told you all this or not in any of my prior videos. I know I addressed the 360 issue, but I do that one first in my calculator because I want to write it down. That's going to be a crazy looking number. So I do that one first in my calculator, and then I multiply it by 6,000, and then I multiply it by 0.12. Or you could, if your calculator has, you can just do 12 and hit the percent key. I just don't do it. I like to do it that way. And that'll give you $180. Same as there, but it's just in a different order. I do this part first. It just works out neater. I mean, it's a crazy number, and I don't want to write it down. So I do it first, and then I do the other numbers. Just how I do it, all right? I don't want to feel like I need to write it down. All right, now we know we need 180. So 180 plus 6,000 is 6,180. That's a 1. So we're going to receive cash $6,180. We're going to debit notes receivable because it's now being paid off, and the interest, we just calculated interest revenue is 180. Now, why didn't we do an adjusting entry? Why didn't we do an adjusting entry, y'all? Well, if we're only going to do the adjusting entries from the end of the year, then the loan's taken out in August, and the loan's paid back on August 31st, on October 31st, that we've calculated, right? So there's no need to do an adjustment. If we're going to do adjusting entries just for the year end, we never even got close to year end. It's October. We got another 2 months before the year end. So there's no need for an adjusting entry. Almost done. So we have this loan or accounts receivable, or we could be making somebody a loan. All right. I don't know. Does it say? All right, so let's just read this problem because it's a little different, and I want to make sure I read it along with y'all to just try to highlight some of the most salient points in it. So what they're doing is saying we got an adjusted trial balance. It shows we got a $10,000 notes payable, or notes receivable, sorry. And it's a 6% note. It was dated December 1st, and it had a 45-day maturity. Prepare all needed entries, which is adjusting entries for December 31st, and for the note's maturity, assuming it's honored. There we go, that word honored again. That means they kept their word to pay. So paid. So on December 1st, we're just kind of, this is almost like forensic accounting, really, right? We got a little piece of evidence. I'm trying to put all the details together, see if anything's missing. So what they have is a debit and notes receivable. We were told that because it's showing up as an account on a trial balance. What happens is one of two things happen. Either we literally lent somebody money, or we converted, like we've done in the prior problems, accounts receivable to notes receivable. So it's one or the other. And we don't know which. So what we're doing is, I'm going to get rid of these two. It's just going to say cash or accounts receivable. We don't know. Now it's a 45-day note. All right, so 45-day note over 360 times 6%. I like to do in decimal form. Y'all can keep the percent if you want. Times 10,000. Do it on your calculator and you get $75. Well, here's the thing. 31 days, December 31st, 31 days later. That's been 31 days, so you can't count December 30. So it's been 30 days. That means they'll be paying, if it's been 30 days between December 1st and December 31st, that means they'll be paying us on the 15th day of January, paying us off. So we've got an adjusting entry we need to do between the years, right? So 30. And let's make sure we know how we got 30. So 30, December 31st minus December 1st, because you don't want to count the day you got the loan. It's 30 days divided by 360 times 0.06. Boy, that's awful. Times 10,000. Looks like I'm going to have to pull out the pen for the rest of the videos. Right on the mouse. I just can't do it. Oops. I started thinking about how I was going to start using the mouse, and then I forgot. This is 50. Pause the video. Make sure you get 50. Make sure you get 75, because those are key. Those really are key. All right, so then this is the same entry we've been doing almost the entire course now. Debit interest receivable for 50, and go ahead and credit revenue for 50. Then when they pay us off the loan, we're expecting $75 in interest, right? So $10,000 they owe us plus 75 It's 10,000. I can't live with that one. It's 10,075. Still had the eraser mode on. It's 10,075. When I give it absolute 100% focus, I can actually write okay. All right, so 10,075 is what we're expecting in cash from the customer on January 15th. So debit cash, 10,075. Credit interest receivable, this one right here, for 50. Now, we've already brought in 50 as revenue, and we have a receivable for that. So that means we got $25 more to go. And that is for the 15 days in January. So interest revenue, 25. 50 plus 25 plus 10,000 equals 10,075. And that's how you do that entry. Wow, that was it. So shorter problems than maybe the other parts we've covered so far, but like I said in the prior video, what I'd like for y'all to do is to just take the time now to go back and work these problems. So you've got the handout, or you can do this. I'm going to erase let me clean this up a little bit. So you can take this and you can just work this problem really fast. There's no answers. So you can work that, maybe pause the video and work it. Or you can rewind at this point. It's 11:41. And then you do the same thing with this video. You can do paying this debt on this problem, well, right there. And then you can also practice doing the problems here. Oh, I'm trying to erase and I'm drawing. You can get the due date and the entry here. I think the due date is probably the most important one here. Maybe try to practice getting the due date. And then I think you'll be ready to work the homework. You'll be in good shape. So this concludes the video on this concludes all the videos on Chapter 7 Solutions Part 2. If you have any questions, please email me.